But of course, the more interesting one is when you look at disruptive innovation. And that's really when you start to create a new market based on what an existing market was already. And I think we all know the examples that are there, and it's a slide that gets shown quite a lot, where you have Facebook, which is, you know, the most popular media owner, but they create no content. Uber is a great example of a taxi company that owns no vehicles. Alibaba, a retailer without any inventory. And Airbnb, biggest hotel with no real estate. What I like about these examples, and for instance Uber in particular, is that they looked at an existing industry and they in a way turned that around. Before Uber was around, you were standing on the street trying to find a taxi. And they looked at that same model and say, hold on, what if we work with technology and find a way where the taxi can find you? It's the same thing, but they've innovated and they've disrupted that industry very much. And they do that by using technology. Now, if you look at the financial sector, you have the term fintech, which is finance and technology combined. And there's a lot of innovation happening in there. And if you look at the basic areas where that is, and when you look at crowdfunding in general, there's 4 different ways of doing that. And I think we've all seen examples of crowdfunding in one way or another. For instance, all the way on the left side, the donation crowdfunding is really, let's say, actually Movember is a very good example of that. A lot of people during the month of November, men will grow a mustache and they will get people to donate money through a website to causes that are good for men. That's crowdfunding, but it's just the people who are giving money are not necessarily expecting any return besides the fact that they're feeling good that they've done something good with their money. On the rewards base, you have platforms such as Kickstarter, for instance, where you have people who have an idea, who have a product that they want to make. They don't necessarily yet have the money to start making lots of that product and start selling it. So what do? Is they create a campaign where they say, this is the product I'm going to make. If you want to buy it, you can pay me for it now, so that when I have the money in my business, I can start making the product, and the moment it becomes available, you're the first one to get it. That's a great way, if you have a good idea, to also test your market, to see whether your idea is going to sell. Because if nobody is supporting your campaign on these kind of platforms, well, that's going to be very difficult to find, a market for it afterwards as well. I'll skip now to the equity side, which is what you hear a lot when you talk about crowdfunding. And it's something that we as a business go through. Whenever I tell people, oh yeah, we're a crowdfunding platform, the immediate reaction is, oh, so startups are looking for investors and they sell equity on your platform. Because that's what people think about when they think about crowdfunding. And it's a great way to do crowdfunding, because if you have a great idea, and you want startup capital, you can go through your friends, fools, and family round to get that capital into your business. But you can also take it to a wider market, sell small amounts of shares in your business in order to get the initial funding that you need to get started. However, what we focus on as a platform itself is the lending side. This is for the businesses who have high growth potential. They're already existing. So they've been going for 1 or 2 years. They have a track record. They're profitable. But rather than giving away more ownership of the business, rather than selling more shares, they're actually saying, you know what, I still need cash in my business. I need to grow. I want to hire more people. I need to go into a bigger office space or something like that. But I don't necessarily want to take on another investor or another 20 investors. So what these companies want is basically the cheapest way to get financing is by just borrowing money. Now, in this market, but actually in a lot of markets, small companies like that, SMEs, when they go to a bank to get financing, either the financing is not available or it is extremely expensive. And to give you an idea, here in the UAE, we've done some research on comparison sites and so on. It is upwards of 18% interest that businesses will need to pay for small loans. And that's for the good businesses. These are the rates that the banks advertise. So from our point of view, we said, well, hold on. If we can directly connect those businesses who are creditworthy, who are good, who have a track record, who are growing, with investors who are happy if they're earning 10, 11, or 12%, there's a huge cost savings in there. And that's what we try to do with our platform. So peer-to-peer finance is really using the idea of crowdfunding But rather than doing it on an equity side, you do it on a lending side. It's nothing new. And us coming to the UAE, we're now exactly 1 year old. We didn't reinvent the wheel. We came with something that was already existent in the UK, where you have companies that are, Zopa was established 10 years ago, right? And for a long time, these platforms have been growing, they're getting bigger, but there was nothing in this region. So the SMEs in this region were not yet able to take advantage of these kind of platforms. So what we did is we said, okay, well, let's have a look and see if we can do this, because the growth projections for this industry, and these numbers are being revised all the time because it is just growing very, very fast. And we have a market here in the UAE where we have, an investor community that is willing and able to take a little bit more risk and support the SMEs directly. And we've got a huge growing SME community that need the help and that need the financing to grow. So just to talk you through a little bit on how it works, it's actually quite simple. A business comes to our platform, and a lot of times they'll register online, or they'll meet with one of our colleagues, like Gavin, who's in the back there. And these companies say, okay, well, look, I need to hire a few extra people, or I'm moving offices. I need anywhere sort of between 100,000 to 500,000 dirhams or something like that for my business. And a good example was we had a food and beverage company out of JLT who said, oh, we are now at capacity. We are growing so fast that we cannot deliver another salad during lunchtime. We need extra space. We need to go somewhere else. But of course, if you have a very successful business, that's great. But to open up another location, that's quite an investment. Now, rather than that business saying, okay, well, I'll call my family again and get some more money in, or I'll call my friends, or I get somebody to invest more money, they wanted to take on that because they have a very successful business that's paying the bills already. So they're able to repay a loan. So these companies come to us, we assess them, and we pretty much act like a bank in that capacity, where we take all the bank statements and documentation and the financials and so on to basically give a profile on behalf of our investors on whether this business is capable to repay a loan and willing to repay a loan. And I say willing because there's a lot of cases that you may have read in the newspapers and so on of people skipping the country and not paying their loans off. So we do a lot of research on the management of the business as well to see whether or not they are at any flight risk or what the flight risk would be for them. Once we are comfortable with that business, we put them on our marketplace, and then the fun starts. Because like Uber, who went from having people looking for taxis now going for taxis looking for people, or finding people, we are changing the banking idea by actually making investors, by making the money compete for the business. So once we've approved the business, we put them on our platform, and we start an auction. And that's literally like an eBay auction, with the only difference that on eBay the price keeps going up, on our platform the price keeps going down. So when we list a business, investors start to bid money. And you'll have an investor, at the moment we have, we've had 2,600 investors register on our platform. And what ends up happening is they will say, okay, I will give this business 10,000 dirhams, but I want to earn 15%. Everybody's going to try to get as high as possible, of course. And another investor comes on, he says, okay, I have 1,000 dirhams and I want 16%. And that goes for a while. All the way up to the point where, let's say this business was looking for 500,000 dirhams. There is now offers from 70, 80, 90 different investors at different rates, but that total 500,000 dirhams. At that stage, the business can either say, I'm accepting all this money and I'll take it today, or if the auction of 2 weeks is still within that time period, he can say, you know what, leave it open and see what happens. Because the next investor that wants to lend any money to this business can only do that at a lower rate than what is currently being offered. So like on eBay, he's outbidding someone by lowering his rate. So for a 2-week period, you get lots of investors basically competing to lend money to this business, and the rate keeps dropping. And that goes all the way down. I mean, we've had some businesses now being able to raise finance in under 10%, which was incredible if you compare it to what the market would be asking for them. But that's because lots of investors were interested in it and they were competing. in the last year, we've done quite a lot, and I have a slide later on to see that. But there's not been any business so far that has not reached their 100% funding goal. So every single business has been able to take advantage of that auction mechanism where when the loan offers hit that 100%, the rate starts to drop because other investors want to put in.
But are you only focusing on UK-based startups?
No, UAE-based. It's only UAE-based for the moment. We ourselves are looking abroad, but at the moment we are looking at UAE-based businesses. So once the auction closes, the business accepts it, and the next day he gets his money. And then he starts to repay that loan on a monthly basis like you would if you take money from a bank or something else. Now, if you look at how this whole concept disrupts, and that's a little bit what we're talking about today, is that if you take a traditional banking model, they will lend to a lot of businesses when times are good, which means that their checking may sometimes be a little bit less because they're saying, look, we need to place money into the market, we'll build a big portfolio. Even if our defaults are quite high, we are still making a margin on top of it. The other thing that a bank does is they have a lot of operating expenses. They have lots of locations around the world, they have relationship managers everywhere, and so on. We, as a P2P platform, have technology. So our operating expenses are relatively low. And what ends up actually happening as well, because we can spend more time and we are specifically focused on financing for one particular group of companies only, our default rates are a lot lower as well, globally. So if I look at global peer-to-peer platforms, which actually means that the rest of the money that is there is profits that can be shared between the investors, but also with the businesses. So you end up with a situation where as a platform, you're in the center of these two, but the businesses are getting much more flexible financing at better rates, and the investors are earning very good fees on that. Now, we also didn't just take that UK model, plugged it into the UAE, and hope that it would work, because we all know this market is different from other markets, and every single market you go into will be. So what we started doing, and as a platform you see that, is on the one side you have an alternative investment industry, let's say. So these are people with money who want to invest their money into different places. So we gave them an option with Beehive to invest it into the SMEs and get good returns on it. We also looked at the SME financing, and we offered them this lower cost financing. In order to tailor to the market here, we had to make it Sharia compliant. Because if we want to attract a lot of the investment opportunity that is here, a lot of the investors that are in the country, they're not going to want to invest in things that are not Sharia compliant. And we are actually the first platform globally to have been certified as being fully Sharia compliant. So we've had external people come in to look at all of our processes, our documentation, and everything that we do to ensure that we are Sharia compliant, which also means that we can comfortably give investors an opportunity to lend to these SMEs. So just in general, I mean, what is it that the advantages are from this with regards to both sides? So, you know, as we've discussed, we have finance available, which is good, because at the moment, a lot of these businesses do not have the ability to get cash. They can borrow that up to 3 years, and we've been able to generate, and it's actually more than 30%, but it's a 30% saving on the cost of finance, where businesses were borrowing at 20% before, they're now borrowing at 13 or even less. We also process it much quicker, and we are much more flexible.
Is there a secondary market for the loans?
Yes. So as an investor, if you have lent money to a business and your financial situation changes and you need cash, you can offer your finance parts that you own in these businesses onto the secondary market as well. So from an investor point of view, it's a great product where you can earn a good fee, you can manage your risk because you're investing in 50 businesses and not into 1 or 2. And at the same time, you know, there's a secondary market, there's great technology behind it, which is very easy to use. The one other big advantage is the fact on the business side that we have no early repayment charges. So you have a lot of SMEs who need to take money today, but of course, if 2 months from now, they sign a huge contract with Emirates Airlines, suddenly their financial situation changes. Why would they want to continue to pay off a very expensive loan if they have a lot more cash coming in? So if they were to take a loan from one of the banks would basically charge them a penalty fee for repaying their loan early. We don't have that. So it's a much more flexible way for businesses to take finance because they know that if they do very well, they can pay it off very quickly.
But then how are you going to convince your investor who has already invested money, expecting a 10% of return?
Yeah, so for the investors, actually, it's not a bad thing because they get their cash back and there's other businesses on the platform to invest in. So the way investors look at a platform like this is a little bit different from an equity platform. The investors in general are a lot less interested in a way into the actual business. They want to know that the business will repay their loan, but whether the business is has invented a new technology or whether they are a food and beverage company doesn't make much of a difference to the investor. They're looking at a portfolio. The investors that we have say, I have 1,000 dirhams extra that I want to invest on a platform like this, and I want to spread it over 10 different companies. Once they have it spread, even if one of the companies pays back early, they'll put that 100 dirhams back into another company. And that's the mentality of the investor community that we have. Whereas on an equity platform, it would be much more important because then suddenly you were expecting to have cash in that business, and if they give that cash back early, you would not have that anymore. Feedback has been great because we really do offer a very, very good product to these businesses. And what we've been able to do, because our rates are so much better and our conditions are very good, we've been able to attract very good businesses. And these are, I mean, you'll recognize some of the names on here, but to give you an idea, these businesses here all just got voted again as being part of the Dubai SME 100 list, the 3 examples that I've given. We had another company that we financed, Duplace, which you may have heard of. They made it into the SME 100 this year. We went to the event, and there were 8 businesses that we financed that were on the stage in the SME 100, which we are very proud of because those are high-profile UAE businesses. Our investors love it, but at the same time, these businesses, were able to do very well with the help that we were able to give them on the financing side. We are always looking for very good businesses. We are what we call a lender of first resort because we have a very good product to offer compared to the market. And we are basically looking for businesses that are 2 years old, profitable and growing, and then we can see whether or not we can help you with your financing. I realized that I sent this presentation a little while back because the numbers have changed a bit so far. But on the business side, we're now at a point where we financed 50 businesses. So 45 there, it's already gone up. The rest, those statistics are still very much true. It's actually a little bit more than 30% savings on cost of finance on average that we've given. We've done a lot of refinancing as well of SMEs who had existing loan facilities at a bank that came to us and said, I'm currently paying 23%. Is there not a way where I can take money on Beehive and I repay that loan so that I really have a savings in my business? And for the right kind of businesses, we've done that as well. On the investor side, as I said, we've had 2,500, 2,600, something like that, of registered investors. Out of those, you need to realize that for every auction that we've put on the platform, the number of investors in there are now more than 100. So the guys who are financing that business are more than 100 investors in each of the finance requests at the moment. And the other ones that are all registered, well, they missed out on that one. So they're going to be super keen to get in on the next one. And that's the kind of competition you create, which constantly lowers the rates for the businesses. The investors have been able to earn a 12% annual return. That's after the fees that they pay for using the platform. And we've been very... sorry?
The fees you charge them are fixed, or?
So the fees that we charge the investors are based on the repayments that the investors get. So we charge a small percentage based on the capital that's being repaid every month. We don't charge on the profit that the investor makes. And we were very privileged to win the Startup of the Year award at the Gulf Capital Awards 2-3 weeks back, I think was it? Yeah.
For the businesses, how much do you charge them above the?
So for the businesses, we charge an arrangement fee at the time when they are successful in the auction. So when they take the money, we charge a fee of either 2, 3, or 4% of the value that they're getting. based on how long the loan is. So for a 1-year loan, we charge 2%, for a 2-year loan, it's 3%, and for a 3-year loan, it's 4%.
So how about 0% default rate, is that right?
Yes.
And what about late payments?
No late payments yet.
No late payments.
And look, it's not to say that that will never happen. Yeah, I mean, we all know that SMEs are riskier than lending to Coca-Cola or somebody like that. But at the same time, we've been very, very careful. We could have lent 4 times as much as it's, right, in the last year. But we would be in a similar situation that a lot of the banks and a lot of the financial institutions are right now, who have been lending to a lot of SMEs when the times were good, who are now literally in the press saying we're not lending at all anymore to SMEs. From our point of view, because we've really fine-tuned our credit and risk model, we're now able to actually open the doors. We're saying we're still open for business, and the right kind of businesses will happily help them get the financing. So what are our aspirations? Well, we want to grow because this model only works with big volumes. The UAE market is big enough, but not big enough for us in a way. We've realized that we have a very strong team in place that is able to launch this kind of stuff in emerging markets and in a Sharia compliant way. So that's very much our focus with regards to international expansion. Within the UAE, we are working a lot now with different government entities, with different areas to see how we can further get more liquidity into the market and boost the economy. We were, for instance, invited yesterday when the announcement came from the Ministry of Finance for the innovation. Our CEO, Craig, was on the panel where Sheikh Mohammed was there as well. We are very much now involved in these kind of discussions because the government here also sees the impact that we're having, or that the potential impact that we have on the economy here. And that's what we're going to be driving within the region. One of the things that we did for that, and I thought I'd give a little bit of a takeaway from this presentation before we have a discussion, is, as I said, we had an innovation white paper that we wrote. And as part of that, we invited a bunch of the SMEs, the owners of SMEs, to a breakfast session. And we took some learnings from that. And I thought it would be interesting to share with the people in the room some of the learnings that we had. The first one, if you want to innovate, you need to learn to fail fast, think positive, and then integrate the changes in there. Now, what does that mean? A lot of the companies we spoke to said, you're going to start a business, or you're going to have a business, and you're going to have an idea, and you're going to think, this is it. This is perfect. We're going to keep going. You need to build in a lot of checkpoints to see, is what we're building really still fit for purpose? Is it still going to serve a market need that our customer is going to pay for in the end? And if you realize that there's an issue anywhere, do the assessment, make the required changes, and do that very quickly. If you try and go through one path for too long, you're wasting time and money of your investors, and you're wasting time and money of the business. The next 3 points are all about people. So if you're talking about innovation, innovation is about getting ideas out there, having the right people to have the ideas. So the first thing was, what all of these businesses said, and what every business struggles with, is finding the right people. Because you want to find people that want to create something with you, that want to help you out, that want to solve the problem that you've set out to solve, and that want to co-create as well. You know, and that's a special kind of person, and that needs to be a good fit. When we're looking for people within Beehive, a lot of the discussions we have are not necessarily about previous experience and what have they done before. It's all about, do they get what we're trying to do, and do they get, where we want to get to, and how can they contribute to that? The third point that came is then when you have the people in the door, and let's assume you found the right guys to work with, how now do you have a culture within your business where people share ideas, where they are actually encouraged to share ideas, and where those ideas are implemented? And that's particularly important in this region. We work with a lot of different nationalities, and in some countries, people have grown up not necessarily so much encouraged to raise their hand and say, can we do it differently? A lot of cultures and a lot of places where people are from, especially when they're living and working in the UAE, for a lot of times and in previous jobs, they will have been told, these are the 10 steps that you have to do and follow them exactly. And they're not going to question those 10 steps. So you need to constantly encourage the people in your teams to question, to make things better. And when they come with an idea, you know, when you're very busy as a business owner, sometimes it's like, yeah, well, don't waste my time with it, and you want to get rid of it. That's the last thing you should be doing. You should always try and listen to those ideas, even if you realize for whatever reason you cannot implement them. Give people in your teams at least the feeling that they're being heard, and that you know, you understand what they're trying to do. Because that, at some point, they're going to come to you with an idea that you didn't think of, and that will turn around your business. And the fourth, which is something that is very important in startups, but even very important across all sorts of businesses, is empowering your staff to make decisions. Of course, that means building in enough checkpoints that people are not overstepping certain boundaries and that there's still enough corporate governance in place. But it's something that we did at the time in DMCC very much. We started off with a company, a typical government entity where you're sitting, and if you're speaking to a person, unless it's exactly already on his list of things that he can decide on or she can decide on, they're not going to give you an answer. They're going to have to talk to their manager. What we focused on very much is pushing that decision-making level down to the lowest possible level within the company. And we really started thinking about, well, if somebody sits at a desk, and what kind of questions will people ask him? What can we allow him? What kind of discretion does this person have? What can we allow him to decide on? And what do we need to tell him that he needs to check with others? But having the power to make decisions and having the right people and then having them share ideas actually lifts your company up to something that you didn't even imagine could happen. Because as a business owner, you may have had the initial idea to start the business. You may have the idea how to grow the business. But it's still all the people within your entity that are going to help you make it better and faster. And the last thing, which is very much the story of Beehive, is confidence is key. When we launched this business, there was, and there still is, no regulation on how to do peer-to-peer finance. When we first launched, every single person I spoke to said, what does the central bank say about this? What does the financial regulator and the DIFC say about this, right? And before us, there were platforms who tried to launch, who didn't, because they didn't have those answers ready. Because they went and they said, okay, well, let's ask permission and then see if we get it and then move on. We basically said, okay, well, we know that UAE doesn't have the regulation. However, there's regulation in the UK. So let's take that best practice. Let's set up our business in the right way, make sure that all the checks and balances are in place, and launch it. And let's just show the government, the regulators, what we can do, what impact we can make. Because then when they come, and they will come, and we hope that they will come very soon with regulation because it will help everybody. But when they come, we know that we're doing the right thing, and we know that it's based on an established market that is already 10 years old. So we were very confident. That's why we have radio advertisement. That's why we are speaking at different events, because we know that what we're doing, we've set it up in the right way. And you know, we know also, and our confidence is there, that when regulation comes, actually, regulators are very likely now going to come to us and ask us, how should we do it, and how can we make it better? And that's something that I think applies to a lot of business people, where when you want to start something, you know, it's about risk in a way. But that risk is there if you do the right thing and if you do it in the right way, and if you're confident that you can make it happen, is just keep on pushing forward with it. So that's really the presentation that I had for today. But I'll open it up to questions. And I also have, I brought a couple of memory sticks with this innovation white paper on. So anyone who asks a question gets one. I have 10, the 10 first. There we go, first one, yeah. Do you have any question about the presentation?
Thank you.
You spoke about funding, so obviously the investors and the company. Do you see investors coming in from other countries?
Yeah. So the mix of our investor community, most of them are from the UAE, and then within that, it's basically it's your sort of Western expats, Indian, and now we've started to get a lot more Emiratis on this. So they're starting to see that this is quite interesting, and it's a way for them to also help the local economy. but we also have a lot of investors that basically, are living in the UK or in the Netherlands where I'm from or something, who say, actually, this is quite a good way to invest my money, make a very good return, right? Everybody in the world learns about Dubai and how fast it's growing and Expo 2020 and all these things. So people are saying, this is actually quite a good way for me, with control of the investor himself, to make a good return in a high growth market.
What are the mechanisms for a foreign investor, if his funds are coming in from overseas?
Yeah, so the way it works from a fund's point of view is that an investor has to fund their account with Beehive, right? So when you sign up as an investor, you go through an entire KYC process, and that comes back to the regulation thing that I talked about, right? So what we do is, just like when you open up a bank account somewhere, you need to give your passport copy and you need to give your proof of residency and all these things. We do the same thing. And we work with an external party who also does a KYC check on every single investor. Once that is all approved, the investor nominates a bank account that they will send money from. Now that bank account can be in the UK, it can be in Switzerland, it can be in the UAE. As long as the money comes from there, and when the investor wants to make a withdrawal, it goes back to there, from a money laundering point of view, everything is as it should be. So that's how that works. So that's why we can open it up to any investors, because they will send their money here, but we have a proof of residency from the UK, we have a passport from the UK, all these kind of things are in order there. Yeah.
The money is invested with you.
The money, well, it's not invested, it's in a segregated account. Yeah, here you go. See?
No.
I have 10 of them that I want to get rid of. So yes.
Anyway, first question I forgot. Anyway, in terms of any dispute between the lender, Beehive, as well as the local entity, which jurisdiction law will be followed? Is it UAE or UK?
No, it's UAE. Yeah, so the contracts are all made based, actually, we've based the contracts all on DIFC law. So that's your first point. If something goes wrong, it goes to DIFC courts. And then from there it gets on. So.
And if the money you get from abroad and the money has to go back to the account in UK, how the taxation of this money is being treated?
That is up to the investor in the UK. Because here, we have done everything to follow the tax rules in this country, which are a lot more flexible than in the UK. So the responsibility, and that's the good thing about a platform like this, is we do a lot of the work. We are the administrator. We follow up on the payments. We process a lot of things. But we actually don't become a party to the contract. So the investor lends directly to the business, which also means we're a startup ourselves. If we were to go bankrupt, actually, the contract is still between the investor and the business. And that contract continues to exist. And we have a company, an external fund manager that we've appointed to basically manage that in the case that we were not to be there to manage it anymore.
Quick ones too. Do you have any minimum and maximum amounts in terms of the investment?
Well, we have a minimum amount.
Mm-hmm.
Obviously, there's no maximum because I would love to have investors put lots of money on there because that helps more businesses. But from a minimum amount, you open up an account with as little as 1,000 dirhams.
Mm-hmm.
And for every bid that you place, the minimum amount is 100 dirhams. So if you're looking at minimums, what you end up having is you open your account with 1,000 and you can put 100 dirhams in 10 different companies then. Yeah.
And the second one is, do you have any risk ratings on the companies that you have?
Yeah, so we have basically an indication where it's either an A, B, or a C business. And that's
your own.
That comes from the model. So it's a combination of things. It's first of all, we look at 12-month bank statements of the business, which gives us a good idea of how much cash is in there at all times. We also get a company called Dun & Bradstreet to do an external audit on the business, and they give us a report. And then we have meetings with the management and we have a data model that has hundreds and hundreds of data points, which are all data points that we can independently verify. So we have a credit team, but actually our credit team doesn't make decisions. They sit there and they take the data, fill it into the model, and then that model, to simplify it, that model gives you a score out of 100. And if you get 65 out of 100, then you will have a C rating. 75 out of 100 becomes a B, 85 out of 100 becomes an A. And then there's lots of things in the model where, if you have bounce checks or police cases, well, actually, you cannot even score a 65 because you get kicked out right away. we've rejected quite a lot of businesses in the first year because either they were too young or because they didn't meet our minimum criteria. Because as I said, we're quite strict, but we can be because you get much lower rates. So, yeah.
Thank you.
You mentioned something about Sharia compliance.
Yes.
Could you elaborate on that, please?
Yeah, so what we chose to do is we use a commodity murabaha structure for any of the financing facilities that are there. So before any funds go from the investors to the businesses, there is a platform that we use which is locally based here in the UAE to make a commodities trade, which creates then a payment obligation from the business to the investors. And I can go into a lot of detail on that, but I mean that. So then we had a company out of Bahrain, which is the Sharia Review Bureau, come in and look at all the different documentation that is around that, look at the actual process for it, and their scholars have then signed off on that. So.
Two questions. The first, the businesses that you invest in, are they limited to a local jurisdiction? Are they limited to a local jurisdiction and they have to be based in DIC or DED or Abu Dhabi? Or you're open to all the UAE as long as they're based in the UAE?
Yeah, UAE. So it's if you have a UAE trade license, whether it's from a free zone or something else, that's fine.
The second question, who are your local competitors? You consider Eureka or Eureka as one of your local competitors?
No, actually, Eureka is together with Eureka we can serve quite a big ecosystem. Eureka focuses more. First of all, Eureka is equity, right? So Eureka, if you put your business on Eureka, you're going to sell shares of your business. The way we look at it, and the way we actually work together with Eureka, is if we have young companies coming to us wanting to sell equity, because sometimes they're not sure what we do, which is why I go and speak a lot in different places, we actually send them to Eureka, and vice versa. Eureka has had companies that have come to them asking for finance, and Eureka said, yeah, but you're not... Like, why would you even go and sell more equity? You can take debt from Beehive. So they're not a competitor, and actually, the way we work quite closely with them on many different aspects.
You consider yourself as the second round financing?
Yeah, it's almost like if you start a company, you go to Eureka first, you get your startup funding, you're doing well, you're going for 2 years, you're profitable now, then you come to us, we'll give you some more money to grow the business. Once you've grown, then you can go to one of the big banks to get proper corporate finance and these kind of things.
Do you classify Beehive as a crowdsourcing platform? So that's one question.
Yeah.
And the second question, if I may ask, now when you have multiple investors bidding or lenders with different rates, so then on the other side of the business, there's multiple investors with multiple rates. So does the contract happen with these multiple investors with the various rates? I'm just, or do you offer it to the business with one interest rate?
It's a very good point, and I didn't elaborate that much on it yet. So it's basically, so on the question of us being a crowdsourcing platform, yeah, we use the concept of crowdfunding, of crowdsourcing, but rather, but we use that to lend money. So we use that to take out the middleman, which is normally the bank, where, the customers of the bank make a deposit in their account, and then the bank uses that money to lend to the market. We say, well, we can do that directly. So from that point of view, yes, we are crowdsourcing. We are crowdfunding. Your question on the different rates and the investors is very good. And actually, what ends up happening is, you need to picture it like filling up a glass. We fill the loan, we fill the glass of whatever they're looking for, all the way to the top, but we start from the bottom. We start with the lowest rates possible and then start to fill it. Now, of course, that gets a blended average rate for the business. So some investors are earning 10%, some investors are earning 15%, but the business, if he calculates the total amount of financing that he gets, it ends up being a blended rate of 12 or 13, whatever it is. Yeah. Now, for the business, they don't want to make 75 individual payments of 100 dirhams here or there at different rates. So what we offer the business is basically a way to make one payment at that blended average rate. On the investor side, our technology then, when that money comes into the account, sends that around to the investors. And if you were successful at 15%, you're earning 15% on your 100 dirhams, whereas I may be earning only 10. So the answer is actually both. For the business, it's very easy because they look at the blended rate only, but the investors they have a contract A formal contract that states you have 10,000 dirhams in that business and you're earning 15% APR on that.
And the default risk is carried by Beehive or by the
No, by the investor. It's a contract between the investor. So what the investor has to be comfortable with is that we've done our credit due diligence. What we do on behalf of the investors is, we take let's say it's a 24-month loan. We take 24 checks in advance for the payments, and we take a total facility check as security. But I mean, if the person skips down, well, then there's not much you can do anyway. But because of the due diligence that we do, and because of the risk model that we have, investors trust that the businesses that we put on are very, very unlikely to default.
But the checks are in the name of the investor, not
The checks are in the name of our investor account. So all the investor money is in a separate account. So all that money goes into. I cannot take that money. I don't even have a payment token for that account. So I cannot take that money and run off with it. It's investors' money. Yeah.
How long is your track record so far?
1 year. So we launched beginning of November last year. So we had our 1 year anniversary party last week.
Are you planning to do something for individuals?
I would love to. But I think, I was talking about being confident earlier. I think that would be too confident. I think then you're really, unless there's proper regulation in place, I think that's going to be something that we need to look at down the line. I would love to, because it is a great way to offer even, personal finance and things like that. But at the moment, the focus is purely on SMEs.
Mortgages?
Mortgages becomes very difficult. Because if I want to register a mortgage with the land department, you pay these fees all the time, right? So if I'm doing that on a peer-to-peer platform, and assuming there's a secondary market that we talked about, the structure becomes a little bit too complicated. So for us, what we focus on is unsecured SME financing. We have.
So, two questions.
By the way, I have a couple. I'm gonna put them here, and you grab. First come, first served. I think that's a better idea. Tell me, yeah.
Two questions on the default rate.
Yeah.
How transparent do you guys plan to be going forward about the default rate to the platform? And the second one is, in case of a default, do you guys stay in the process of recovery, and is that priced in whatever model you have, or is it something that the investors would have to take it on?
Yeah, so we plan to be extremely transparent with regards to defaults. And actually, we're currently already developing in the background more of a dashboard for the investors, where if they're looking at the potential rate that they're going to earn, it's already going to calculate in expected defaults. Now, expected default is not that we know that certain business is going to default, but it's more, we can see global trends, and we can give an expectation of, 1 or 2% will default, or whatever that is.
Is that global or regional?
So at the moment, the only data that is there is global. I mean, we're the first ones here in the region that are doing it on a scale that we are. So the default rates, I'm going to have to look at what's happening in the West and then translate that into this region. With regards to if a default happens, that's very much where indeed Beehive stays in the process. We are appointed as the collection agent, so we will then first of all work with the business to try and find a solution. If there's no solution, then we get a proper collection agents that you have here to go and collect the money. We will deposit the security check. We will take it to court on behalf of the investors. The costs for that, yes, they will be borne by the investors at the time. So that means that if there's a default, but the amount outstanding is still quite low, the investors may decide, actually, we don't want to pursue it. We'll write it off. Our portfolio will be a little bit lower. Our return may go from 12% to 10.5%, but we don't want to spend more money in recovering something than what we're going to recover. So, yeah.
So, two questions.
Yeah.
So, you've been around for a year. How many have actually matured in that time? How many loans?
So we've had 2 loans that we paid early. This is really of businesses whose financial situation changed, and then now we've had, I think, 2 or 3 also that have now fully finished. Sorry? 2. Yeah, there we go. Yeah. So that were 1-year loans, and they've made their 12 payments now, and yeah.
And do you monitor companies through their life? Because I know there's secondary market. I've signed up to yours. I just haven't done the account. But do you monitor through the actual 1 year? Or?
So what we do is for the financing that we do, it's actually we look at the model, and if it stacks up, the business gets the financing. We keep in touch with them, also from a relationship point of view and so on. But it's not like we go on I mean, we expect them to send their annual audited figures back, and we'll go through those, but we don't go out and do another full assessment every year or something, because at that point, I mean, all it would potentially do is give us an indication of maybe there will be a default, which you will get anyway from the market that we hear. So,
Which would help investors. So if it's like a three-year loan,
yeah.
you can change your credit rating.
Yeah, but at that point, the business has already taken the money, right? So at that point, actually, investors are committed.
But there's a secondary market.
Yes. Yeah, correct.
How is your secondary market?
Well, it's basically, so it's there for two reasons. You know, the first one that I mentioned before, if you have invested money in a business and you say, look, I need some cash, you can sell your investment on that secondary market. You can do that at a premium or at a discount. So if you were very lucky and you got your 15% on that business, and you say, you know what, I'm going to try and make a little bit extra on this, you can actually list that finance part with a premium on the secondary market. So if somebody buys it, because it's quite a high rate, they'll be able to offer, they're almost offering you more than what the current value is of that. You can also, if you need cash quickly, put a discount on it so that you encourage people to buy it. How the secondary market works as well is we have a lot of new investors signing up all the time, right? And we're putting about, let's say, 1 or 2 businesses on average every week now. But of course, if you, let's say you have 100,000 dirhams that you want to put on this platform, putting that into 10 different businesses is going to then take 5 weeks, if there's 2 businesses a week. So that takes quite a long time. So what a lot of these new investors do is they say, okay, I have 100,000 dirhams that I want to put on the platform. I'll take 50,000 dirhams and buy stuff on the secondary market so that I can very quickly spread my risk around. And the other 50,000 dirhams I'll invest in all the businesses that come on. Because then when you start to get your monthly payments, you start to reinvest those into the market.
And when you subscribe to the to one of the loans, let's say it's you're subscribed for 50,000.
Mm-hmm.
How long you block the 50,000 of the investor?
Yeah. So when there's an auction going on, you make an offer.
Yeah.
That means the money is blocked in your account until that offer is either accepted or rejected. Yeah.
I just have a question. Do you guys have an internally set up for or a pool of funds for defaults if there's a percentage low or something similar like Zopa is doing in the UK?
Yeah, we're looking at it now, but at the moment, no. We're thinking of some products, for instance, also with maybe younger and riskier businesses to then start putting a pool of money on the side of it. But at the moment, we've not done that, no.
What is the average outstanding tenor, and is there any limitation what the purpose of the funds will be used by the SMEs?
Yeah, so the average, I mean, it's up to 36 months that they can repay. Of course, and you mentioned it earlier, investors are not that interested at the moment in 36-month loans because it's a bit long. So most of the stuff that we list is either 12 or 24 months. And we try and work with the businesses to keep that as short as possible because, of course, the shorter the time period, the more they have to pay every month. So you need to find that balance on what they can afford. But investors love 6-month, 12-month stuff because, you know, the risk profile is different. So, and then your second question was, so the purpose, there is somewhat of a limitation, but it's mostly on the Sharia side. So because we want to make sure that, first of all, the business is Sharia compliant, but also that the use of funds is Sharia compliant, there is sometimes a limitation on what they can use the funds for. Other than that, we need to understand what the funds are being used for, and it's something that the business also needs to put on the platform. But we don't really, I mean, there's no limitation because actually it's growth capital, it's working capital. So if the business comes to us and says we want to hire extra people with it, well, that's great. If you want to use it for decorating your new office, you know, if that's what's going to generate more business for you and we believe in that, then that's what it's for, yeah.
Do you categorize?
Sorry, wait.
Are you able, if you've got the information, are you able to disclose how far along the FSA are in drawing up regulations? I know you said that it will happen. I just wonder if you're assuming you're privy to the information, if you are able to disclose any detail.
Well, we know discussions are ongoing, and actually it's ongoing with all 3 of the big regulators here. So what's currently happening is indeed they're looking at it. They're very well aware of it. You know, as I said, our CEO was with the Ministry of Finance yesterday, with Sheikh Mohammed being in the audience. So people are aware of what's happening. Regulation can take time, and Who is going to regulate is another issue that every country has to figure out. Is it going to be the DFSA, or is it going to be the central bank, or is it going to be SK or somebody like that? That's something that's way over my head, the decision to make there. But what we do know is that it will potentially take some time. So I would love to say that it's going to be within the next year, but I'm not sure that's going to be the case. Sorry.
What's the minimum and maximum rates that you've done so far?
I have to look back, but I think the minimum rate that we had for one business was about 8.5%. And that was a business who was looking for money for only 6 months. Plus, I think they had a corporate guarantee in place from a UK-based company. So the risk profile was fantastic, and investors just jumped on it. The highest one would be, they would have averaged at about 15 or 16, I think, which were maybe a C-rated business who was looking for quite a lot of money for quite a long time. So it just depends a little bit.
The repayments of the borrowers to the lenders.
Yep.
It comes with the principal every month, or the principal paid at the end?
No, it's an APR calculation. So every month you pay back capital and profit. So it's like a mortgage. When you have a mortgage at the bank, that's how it's the same kind of sliding scale.
Do you offer different setups? Example, just interest and then capital paid at the end, or?
Not at the moment, no. So we have, we've launched it at a very simple product, which is from a business point of view, it's a copy product of what the banks will offer, but it's at a much better and more flexible rate. We are also now offering an invoice financing product, and that's more of a lump sum payment at the end. So this is you take 80% of a value of an invoice today. When your customer pays you, you pay back the investors.
But it's rather more short term.
Sorry?
That's more short term.
That's 90 to 120 days.
So it's
Yeah.
kind of a reducing balance.
Yeah, it's a reducing balance, yeah. So every month, from an investor point of view, it's great, because investors every month get a little bit of their capital repaid, and plus, of course, they're earning the profit on it. So.
And internally, have you defined a kind of the portfolio of customers, means in the BFSI, in media, in different telecom or retail, which are the higher risk segment and which is the lower risk segment according to you?
Yeah, I mean, yes. So part of the industry that companies are in will determine a little bit also what their risk profile is, because you have very competitive industries. You have industries that are growing very fast, and you have industries that are declining. So we take all of that into consideration. From our side, what we've noticed is we are very good at helping businesses that do not have necessarily a lot of assets. So what we call asset-light businesses, because traditionally banks are very comfortable understanding that if you have a business and there's a factory in Jebel Ali somewhere, and they can go and look at the factory and they see that there's machines in there, they think, okay, that's a real business. But if you come and you have a technology company that makes augmented reality coloring books, the bank goes, we don't know what that is, so no, right? Whereas we were super comfortable with it because we saw the potential, we saw that industry, and the business had great financials, so we were able to put Pixelbug on the platform, for instance. So, yeah. Any other questions?
Because you mentioned the corporate guarantee, do you usually take any securities in the traditional form?
So yeah, so we don't take any collateral as such. So we don't take inventory or something like that. We will take the checks similar to what a bank does here. So on behalf of the investors, we take the monthly installment checks and a total facility check. And then we take a personal guarantee from the owner. Yeah.
Okay, that's been really a great session with a lot of questions coming out from the audiences, and I think they were very, very intelligent questions. It clarified a lot. And as you rightly said, Paul, it might take a long time for the regulation to come on board. But in the meantime, I think the comfort is that there is a Sharia compliant and there's a DIFC law that applies. So
yeah.
I think it's a great platform for the P2P finance. And I think some of the good takeaways from my side was this: there is zero early prepayment, and then the due diligence done from your side, and SME 100. So there is some credibility that you are taking into consideration, and that really takes care of the risk measures. And I think the numbers that you mentioned are really great. 2.5K investors that have put their money. So I think all those figures really talk a lot about the confidence people have on this system. Yeah. And with that, I think we close this session with thank you to you, Paul, and thanks to all of you for being very interesting.
I have some more.